Ethereum whales just accumulated over 400,000 ETH in the last 30 days, and the price is still sitting at $1,875. Think about that for a second. The biggest players in this market are loading up quietly, and most retail investors are either sleeping or selling. This is either the most obvious setup of 2026 or a trap. We're going to figure out which one it is right now. Here's why this moment matters. ETH has been grinding between $1,700 and $2,100 for months. On the surface, that looks boring. Sideways chop, nothing to see here. But when you zoom into the on-chain data, the picture flips completely. Exchange outflows for Ethereum are at their highest point this year. That means coins are leaving trading platforms and going into cold storage. You don't do that if you're planning to sell. You do that if you're planning to hold through something much bigger. Layer on top of that the institutional angle. Since spot Ethereum ETFs got their momentum in the US market, the consistent inflow story hasn't gone away. It's just gotten quieter. BlackRock's iShares Ethereum Trust, Fidelity's FEETH, these products have been steadily absorbing ETH supply. When you have instruments like that pulling coins off the market while on-chain accumulation is spiking, you get a supply squeeze. And supply squeezes historically don't stay quiet forever. So what actually is Ethereum, and why does any of this matter for your portfolio? Let's make this real simple. Ethereum is the internet's settlement layer. If Bitcoin is digital gold, a store of value you hold, then Ethereum is the platform everything else gets built on. DeFi apps, NFT marketplaces, stablecoins like USDC, corporate tokenization projects, even some central bank digital currency experiments. They all run on Ethereum or use Ethereum-compatible infrastructure. It's not just a coin, it's a compute network that charges fees every time someone uses it. Those fees, called gas, get partially burned, meaning destroyed, every single transaction. Since the merge back in 2022, Ethereum became deflationary under high network activity. Fewer coins in circulation over time, all else equal, means each coin is worth more. That's the structural case right there. Now Ethereum has taken hits to that narrative. Solana ate into its market share. Layer 2 networks like Arbitrum and Base captured a lot of transaction volume, which actually reduced fee burn on the mainnet. Critics have used that to say Ethereum is losing. But here's the nuance most people miss. Those Layer 2s are still built on Ethereum. They still settle back to Ethereum. They still use ETH as collateral. So Ethereum becoming the base layer that other networks depend on isn't a loss. It's maturity. It's what the internet backbone does. You don't see the infrastructure, but you can't exist without it. If this is clicking for you, subscribe to Crypto Sayans. We break down moves like this before they go mainstream. Hit the bell and you won't miss the next one. Let's talk price. At $1,875 right now, ETH is roughly 60% below its all-time high. For context, during the last major bull cycle, Ethereum ran from similar accumulation zones to multiples of its starting price within 12 to 18 months. Nobody can promise history repeats, but here's what the actual numbers look like if it does. A move back to the prior all-time high range puts ETH around $4,800 to $5,000. Standard cycle analysis targeting a new all-time high puts some models at $6,500 to $8,000 by late 2026 into 2027. Those aren't random numbers. They come from on-chain valuation models like NVT ratio and realized cap analysis, combined with stock-to-flow style supply dynamics. What are institutions saying? JP Morgan analysts have flagged Ethereum's tokenization infrastructure as critical to their blockchain strategy. Fidelity's digital asset team has been publicly bullish on ETH's role in the next phase of institutional crypto adoption. And Franklin Templeton, yes, a 75-year-old asset manager, has been tokenizing money market funds on Ethereum-compatible chains. These aren't crypto-native gamblers. These are firms with trillions under management making structural bets. When they move slow, and they move big. And they started moving. Now the part most YouTube channels skip, the bear case. Because if I don't give you this, I'm just selling you a fantasy. Ethereum has a real competitor problem. Solana is faster, cheaper for end users, and has genuine developer momentum right now. If the next wave of consumer crypto applications builds primarily on Solana, Ethereum's fee revenue narrative weakens. The deflationary mechanism only works when the network is busy. Low activity means ETH actually becomes inflationary again. There's also regulatory overhang. The SEC has been inconsistent on whether ETH qualifies as a security. Any hard classification in that direction would crater institutional appetite fast. And macro risk is real. If global risk-off sentiment accelerates in the back half of 2026, speculative assets like ETH get hit hard regardless of fundamentals. The $1,700 support zone below current price is meaningful. A clean break below that opens the door to $1,400 or lower. That's not a doomsday call, it's just honest math. So here's my take. Ethereum at $1,875 is not a screaming obvious buy, and it's not a sell. It's a high-conviction accumulation zone for people with a 12 to 24-month time horizon who understand what they're holding. If you're looking for a 30-day flip, this isn't your trade. But if you believe that institutional tokenization, DeFi growth, and Layer 2 expansion are real multi-year themes, and the data says they are, then sitting at 60% below the all-time high, with whales accumulating and ETF inflows continuing, is the kind of setup you look back on and either feel good about or regret ignoring. The level nobody's watching right now is $2,100. A clean break and hold above that on volume changes the entire technical picture. Watch that level. It matters. Subscribe to Crypto Sayans. We break down the top coins every week, so you never miss a move like this. Hit the bell so YouTube actually shows you the next one when it drops.